Okay, so welcome to tonight's session. It's going to be recorded, just in case it's not nighttime when you watch it, but good day, everyone. Now, what I am going to be looking at today is the Fibonacci extension tool. The Fibonacci extension tool. Now, I'm sure, some of you have heard of, this tool before, or at least you have heard of the Fibonacci tool. The Fibonacci tool, is made up of a number of different tools, built in. And it is the case that the most popular one is the retracement tool. So we have the Fibonacci retracement tool, and then we have the Fibonacci extension tool. So what we're going to be looking at tonight is the one that is not so much popular out there, but obviously it is just as good. I use both. I use both the retracement tool and the extension tool. But I must admit, the one I tend to use the most is probably the one most people tend to use the most, which is the retracement tool. There are times when you just want to know if the trade you've gotten into is going to go far. And I can tell you, I've been in some trades lately. Notably USD CHF and Euro JPY that were just going to the sky, and it was like, hey, when is this thing going to stop? It pulls back and it continues. They pull back and they continue. I suppose we love such trades. We do love and enjoy such, being in such trades. Some people would use, the higher time frames for determining how far a trade could possibly go. Others, on the other hand, would use, the extension tool to determine how far the trade would go. Now, Fibonacci. Let's go. Okay, so even as you can see there, you have a whole lot of numbers, and guess what? That's one thing that Fibonacci is known for. Is known for numbers. It's got numbers which basically has been put together in such a way that it creates different levels. Levels which you could use for entries as well as for exits. So it's, for me, it's a numbers game. It's a numbers game, and you're going to find out tonight. Now, we're not going to be doing some. We're not going to be necessarily trying to figure out, how to work out those numbers. I would say if you find time in your own time, what you could do is to look it up, and see what more you could learn about Fibonacci numbers. But let me just, quickly, show you something. Let's quickly show you something. I mean, you can find this on Wikipedia. This is Wikipedia page. I mean, I'm sure the text is quite small and you can't see exactly, you might not be able to see what is written on there. But, when you go on Wikipedia, simply type in Fibonacci number. I mean, if you type in Fibonacci, it will be talking about the man himself who came up with Fibonacci. So you could learn something about him, but if you type in Fibonacci number, it will bring up this page. Now, I say it's a numbers game. Fibonacci, the man, he is otherwise known as something else, but look it up yourself, so we could save some time tonight. Fibonacci, the man basically, is the one that's believed to have come up with some mathematical calculations. He was a mathematician, and, during the course of time, we are told he came up with, these Fibonacci numbers. Now, some people have tried to dispute whether he's the one or not. Now, that doesn't really make any difference to us. It shouldn't make any difference to us as traders, because, hey, all we want to do is to make use of whatever tool we have at our disposal, and guess what? Use it. That's basically what it is. And so basically we see here, it says in mathematics, Fibonacci numbers, commonly denoted as that, is a sequence, form a sequence. That's the Fibonacci sequence, in which each number is the sum of the two preceding numbers. We could carry on, but basically, what ends up happening is you get numbers like this, 0, 1, 1, 2, 3, and so on and so forth. Like I say, I would not bore you with that. We don't need to know how it is worked out. We just want to know how to trade it. So let's go back to our slide and basically, see what we can find here today. So back to our slides, it's basically a numbers game. Now, what we're going to be looking at today, I have listed here, just, take it that these are some of the keynotes. There might be other things to note, but these are what are most important for us to note, even as it relates to the Fibonacci tool. Now, like I did say, we're looking at Fibonacci expansion today. There is the Fibonacci retracement. I'm not going to be making much reference to that, so it does not become confusing. But think of expansion, the expansion. Now, quite unlike the other, well, okay, I wouldn't make reference to that, because I've learned over the years that in teaching, if you don't want people to get mixed up, focus on one thing and not compare it with another. There are times to do that. So Fibonacci expansion tool basically has 3 points. We're going to get practical, guys. Obviously, we're just looking at the points and all that. We're going to be going to the MT4 application itself. So Fibonacci expansion tool basically has 3 points. I would like to call it ABC. It is best used for trading confluence. Let's change that. Let's just change that in front of you. You know what? Let's call it confluence trading. Let's be grammatically correct. Okay. Oops. We don't want that. Okay. So it is best used for confluence trading. It is best used for confluence trading. And, the point number 3 there says it is used for finding exit points. Exit points as opposed to entries. Now, some might want to use it for entries. Some might want to, put both the Fibonacci expansion and the Fibonacci extension together and use it as confluence, but I don't so much do that. I would rather use, the Fibonacci expansion tool, which we're talking about tonight, with something else, maybe price action preferably, to determine where to get out of the trade. Okay, so it is used for finding exit points. If you want to put it differently, it is used for determining how far the price would go. And finally, I says use as close to support and resistance as possible. Use or maybe apply. Let's say use or apply / apply as close to support and resistance as possible. I suppose you could also say key levels, but let's just stick to support and resistance today because that is perhaps going to be easier, for some of us to find. So this is basically the point I want us to note tonight, even as we look at this tool. So let's now go to the chart. Let's go to the chart itself. You know what? As usual, I would say, let me know what pair you want us to look at so that it won't be the case that I have cherry-picked any pair or any time frame. You could type it in there, type it in the box, whatever pair you want us to look at. Whatever pair you want us to look at, just kindly type it in there. And we would go on and look at that pair. Come on, guys, work with me. What pair? GU. Somebody says GU. Okay, let's start with GU. GJ. Someone says GJ. Okay, we'll start with GU and maybe we'll look at GJ or perhaps another maybe not another pound pair. So you don't think it works on only pound pairs. I would say it works on all pairs. All pairs, at least all the pairs I've used it on. There are some pairs I don't trade, but I know generally speaking, when a tool works on one pair, if you know how to use it, it works on all pairs. So let's start with GU. GU. Come on now, GU. GU, where is GU? There we go. Okay, yep, that's GU. This is the daily time frame. Yes, it could work on the daily time frame, but I know a lot of retail traders don't exactly trade off the daily time frame. Well, yes, you could use the daily time frame for what's it called? For for knowing the overall trend, but most traders I know would usually use maybe the 15-minute for entry, or the 1 hour, maybe even 4 hour. So let's try with the 1 hour today. Okay, let's start with the 15 minutes so that we could find possible more entries. Okay, so this is GU. Let's go to the 15-minute time frame. Let's go to the 15-minute time frame. Note what I said. It's better to use it on for confluence trading. You can use it on its own, but preferably confluence trading. You will have more consistent profits when you use it in confluence with something else. And by that I mean when you use it in conjunction with some other strategy or technique. Some might want to use it with moving averages. Others might want to use it with support and resistance, which we're going to be focusing on today. Some might want to use it with some other tool or setup. But is best for confluence. So because we have made mention of support and resistance, let's look for an area of support and resistance. Okay, so this is GU. We might have to go back. I mean, now the thing is, you could decide to, go with a higher time frame first and then enter on the lower time frame. It just depends on how you trade. I mean, I suppose with more experience, you can actually just use it on one time frame. Maybe you go on the 15 and you just use it there, or you go on the 1 hour and just use it there. So what I'm going to do is just to start off on the 15-minute time frame first, and let's see what we find. So we're going to look for an area of support and resistance. We're going to look for an area of support. And I mean, straight away, we can find one here. And guess what, guys? It doesn't have to be a perfect area of support and resistance. It is also best, I suppose I could have added that to, I could have added that to the note. I would do that as well. Yes, I would do that as well. It's a fourth thing. If a fifth point to note is that best use in a trend. Also prefer, what I would do is I would show you, I will go back to the tool, what's it called, the PowerPoint later, so that it will be captured on this recording. So if I don't, please remind me to go back to the, what, let's just do that now, since this is the beginning of the, the recording. Also, preferably used in a trending market. Yeah. So so just so you have all these points. And guess what, guys? it might seem like a whole lot of points you are going to be looking out for, but believe me, once you start trading it, you realize that it's not rocket science really. It's not like, oh, I have to look out for this, look out for that. No. You would soon find you can trade it very easily, and it becomes like second nature. Let's go back to our MT4. Okay, so I mean, straight away, we can say this is an area of resistance. This is on the 15-minute, is an area of resistance. So what I'll do, I'll basically just draw my block there. So you could say this is an area of resistance. This blue bar or this blue block is or represents resistance. We're going to basically also, seek to do it, with we're also going to seek to do it, with support. Okay, so I've turned off my camera, guys, just so that I'm not distracted and you are not distracted as well. But if at any point you stop hearing my voice, just type and let me know in the box. Okay, in the chat box. Okay, so we have found an area of resistance. What we now want to do is to see if there is a trend. And guess what, guys? It's simple. Usually when price goes off, comes off support or resistance, it's usually the beginning of a trend. It could be a reversal, which obviously could, trend for some time, and then it will be the case that you can actually then look for, a point of entry or exit using your Fibonacci tool. Now, the fact that we are looking to use Fibonacci extension tool here basically means that we already know how to enter a trade. Well, ideally, it means we know how to enter a trade, because we are now just wanting to see how far the price would go. Now, some traders might not so much bother with the Fibonacci tool, but just in case you want to, I mean, this is what it is. If you say this is the area of resistance and the price has come off that area, let's make it slightly bigger, and price has come off, has bounced off this area or reversed from this area, you most likely would want to target swing lows as where the price would probably get to. You might want to just target swing lows, or if you like, structure as areas where the price could get to, or where you would want to exit the trade. Some people would basically just mark out areas of structure or swing lows. So, and you can see exactly what has happened here. Price, if you entered here, price eventually got to this area of, call it support. Yes, eventually it broke it. Call it support, call it structure, call it swing low. Price got here. It also went here. So guess what? Perhaps you don't exactly need Fibonacci expansion tool. But guess what? It's also the case that it could give you some more confidence in your trade. It could give you some more confidence in your trade, especially when price gets, bounces off an area of support and resistance. In this case, resistance. You will know that, okay, it most likely will get to the next, swing point. Because if you think of it, the price swung from this area, so if price reversed around resistance here, it most likely will get to another swing point or areas of structure or support. But like I say, if you want more confidence, you could want to do that. Now, having said that, there are different types of trading. Some of us, swing trade. I have not been swing trading for some time, but I was just thinking about it because of a whole number of things I'm doing. I'm gonna be swing trading some more for the next couple of weeks myself. I've not been swing trading for some time. I've just been mainly day trading, not scalping, not swing trading, but I've been focusing on day trading for the last couple of weeks. Now, by the way, you can also use this for scalping. You can use it for any type of trading, scalping, day trading, swing trading. But obviously, the smaller the time frame, the more tricky it might get. You might then need more confluences. But let's go. So we have determined that price is leaving this area of resistance and is coming down. How far it's going to go, we don't exactly know. But we know it can possibly get to structure here or structure here, But just in case you are not, that's if you are swing trading. I mean, from here to here is about 100 pips. That definitely is a swing trade. I mean, you could get it in one day, like on Friday. That's just this Friday past. There was GJ made a 200 pip move. I didn't get in. I missed it. I didn't get in. I traded I traded on Friday, but it was just some quick trades. I missed GJ. It did about 200 pips. So it basically would, so there are times where a pair would go from one swing to another. Obviously that's swing trading, but there are times it would not. It could be at other times, even though you are swing trading, you also want to take profit along the way. That's when, I suppose you could say one of the times when Fibonacci extension tool comes in. And by the way, well, okay, let's focus on extension. Same it is with retracement tool, because there are different levels. Those different levels, are useful. So it could be that that the price is going to get to this swing low, but you want to take profit along the way. You want to take partial profits along the way. So what are we going to do now? We have entered the trade. I'm not so much looking at how to enter trades tonight, guys. I mean, we have a lot of strategies which we teach, even though for those who are long-time members and, you know what strategy we have been using lately, entry strategy that is. I'm not even going to think of, focus on the entry strategy here. I'm just going to focus on, where we will be looking to take profit using the Fibonacci extension tool. Okay, so this is a yellow broken line. I mean, for those who have been trading with me, my yellow broken lines show where I would have entered the trade. So let's assume I entered the trade here. Let's assume I entered the trade here for a sell. Okay, the question now is, how do I apply my my Fibonacci expansion tool? Okay, you basically draw it out from an area where the price started to where it so basically if you're starting here, if you say you entered here, the price went down and it basically pulled back from here, or it retraced from here. Let's use the word pullback so we don't confuse the use of the word. So let's use it pulled back here. So it started here, got this low and pulled back before continuing. So now you entered the trade here, but when using the Fibonacci tool, whether it's expansion or retracement tool, you want to start from the very high, in this case, because we are, looking to find how far it's going to drop. So you want to start from the very high of a swing or the very low of a swing, another swing. So this was a swing high, if you like, swing high. So you would start drawing your tool here from the swing high, or where the swing high started. In this case, it's a swing low. So you're going to start drawing it from the very top. So what are we going to do? We're going to go to here where it says insert. Click on insert. Go to Fibonacci. You can see it brings out a menu. That's retracement. It's, like I told you, it's got a number of tools in there. That's for calculating the retracement, time zone, the fan, the arcs, the expansion. That's the one we want. Click on the expansion, and you can see my what is meant to be my cursor. It has got the tool now in there. So we will come here, even though I entered the trade here, we will come to the very top here, click and hold down and drag to the very bottom, because this is how far the price went. And notice what's going on here. Let me delete this and start again. The candles are in the way, so I'm going to draw it here so you can see that first. So let's go to insert Fibonacci, click on expansion. Let's say we are starting from here. You click on it, you drag it here, and you can see what's happening. You let go. You let go of it. So you pick the tool, click at where you are starting, in this case here, drag it to here and let go. So what's going on here now? I would then click on any of these edges, either here, here, or here. Let's click on here, and I can move this like I want. I can move it like I want, or like I want to. Okay, so we're going to apply it here now. So click on Fibonacci. We select the expansion tool. We are starting from the beginning of the swing low. Click on it and hold down, drag to, the swing low, and let go. So we now have this bit, this is like, if you like, call it the handle. You see, we can move it about, but what you want to do is to move it to where it pulled back to. So from here, the price dropped down here, and it pulled back to here. You can then, click on it, double click on it to disable the handle, so you don't mistakenly move it. Now, what's going to happen is you can see it basically, projects, some prices here. You know what I'm going to do? Let's even make it clearer. Because the candles are in the way, I want to teach it, on a clean page first. Okay, so let's look for a clean page. So basically, look at this. We click on the tool here. We click, hold down, and drag, and you can see it has these Fibonacci numbers: 61.8, 100, 161.8. I mean, you could actually add another one here. Maybe you could add 127. It just depends on, what numbers or levels you want. Some people would add 127 here. Well, actually, let me show you just in case you want to know how to add it. If you want to know how to add, click on there, go to the properties, and go to the levels. You are going to add a new level. Now see the way it is here. Now, if you think of the 161.8, that's 161.8. Look at how it is, tabulated there. So just try and, go with that. Click on add. So if this one is 127, is if that's what you want to add, 127.0. Now think of what they did here. The decimal point is here, 161.8. It is moved, 2 places, 2 decimal places, 1, 2, 2 decimal places to the left. So that's what you're going to do here. So if you come back here, it's 1.27, 0. And then click on OK. You see it's going to add a new level here. Click on OK. Okay, it's added a new level here. You can see, it says FE at the beginning for Fibonacci expansion. I didn't necessarily put that, but you could if you wanted to. You could go back there, just come here and say FE. Sorry, not RE. FE. Okay, so we can see there, it's basically added it there. So that's basically what I wanted you to see. You see, when you bring out the Fibonacci tool, it projects the numbers. It projects them. It projects them. In the either, well, with regards to the expansion tool, it projects the numbers or the levels in the direction which the trade is going to go. Drawing it like this, we anticipate the price is going to go down, so it's going to project it, in the areas where the price is going to go. So assuming, well, okay, in this case, it's a sell. You're going short, so it will be the case that you are saying the price would either get here, 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 or here. That's basically what this would help you do. It will guide you as to how far the price would go. So let's delete this now and go back to the chart. I wanted us to have a clean page so that you can see without the candles getting in the way. But note that when you draw the Fibonacci tool, it projects these numbers or levels, telling you where the price could go. Okay, let's delete this one. Okay. So let's now go back to our, okay, so we have ascertained that this is resistance, and we are entering, the price is reversing, and we've entered the trade based on our entry strategy. We've entered the trade here, or we entered it here, and because we want to see how far the price will go, we will pull out our Fibonacci expansion tool. So the very top, click, hold down, drag to how far the price went before it retraced. Okay, so you now look for the handle. Oh, sorry, that's not where we entered. Since we entered here, we are not using this swing high, we're using this one. So that's something to note, guys. You want to use the high, which is next to your entry, which is closest to your entry. So we're using this swing high. The price came this low. We're not using this. We're not using that. We're not using that. Now, if we entered here, then that would have been the high to use. So just note that, guys. If we entered here, this is the high that you'll use. So since we entered here, we're using this swing high. It came all the way down here, and it pulled up that far. Now, of course, we know, let me make it bigger. Now we know it pulled up that far, came down, went up, came down, went up, but that should not be our concern. The very first pull back is where to use. It starts here, came down here, went that far. And in the process, it projected these levels. So since we entered here, okay, let's check something, guys. Let's check something here. Now let's amend some stuff, guys. If you don't mind, bear with me. Let's amend some stuff, because I've got that wrong. So let's assume we've not entered this trade yet. Let's take this off. Let's take that off, because you want to enter once you have noted, once there has been a pullback. That's something else to note. You can only enter when there has been a pullback. You see, we are creating more notes as we go along because it's vital. It's vital, that you get the criteria right. I'm adding it to the note there. Only enter the trade on a pullback. Okay, only enter the trade on the pullback. So let's come back here, guys. Okay, so basically, you saw that it was retracing, it was coming back, it was basically dropping, and then it pulled back. Now, it's only after it has pulled back that you should really use a Fibonacci tool. Why? Because it has 3 points. It's going to be point A, B, and C. If you cannot get point A, B, C, then you cannot enter the trade. So let's go to our Fibonacci tool again, guys. What I was doing is I was, choosing my entry before the tool. No, before the setup. We want to see the setup first. So we want to see, that there's an A, B, gets the handle, and C. So there's a point A, B, and C. It's only when there's been a pullback, you can then decide to enter the trade. So there's been a pullback, and you can now see that the trade is going back down because it is not far from the resistance. It's going to go down. So you enter the trade here. You enter the trade there. You know what? Let's use a different color for our entry. You can actually change the color of the Fibonacci tool. Let's do that so that we are able to differentiate the different colors. So if you want to change the color of the Fibonacci tool, you can see at the moment it's projecting these numbers as yellow. Let's make it purple. Okay, so that's fine. So we can see here that the Fibonacci projections are purple, whereas our entry is yellow. So we have point A, B, and C. The price was dropping. We now entered here. Now, even if you entered here or wherever you entered, it's dropping. So you are now projecting how far it could go. So basically, you entered the trade here at the drop of this big candle. You entered somewhere at the, when this big candle was dropping. And guess what? You now stay in the trade. You've entered a sell. You've entered a sell here on this candle. You entered a drop on this candle. Guess what? It basically pulled back against you. That's fine. That's fine, because you are going to be placing your stop loss above that swing anyway. You could decide you'll place your stop loss, let's make it red. That's the stop loss. It just depends where you want to place your stop loss. I mean, we have a way of determining where to place the stop loss, but let's say we are placing the stop loss above here. So even though this price pulled back against you, you're not in a drawdown, don't panic. Don't panic, because there is confluence here. You did see that, there was, some solid area of resistance. Is a solid area of resistance. So you have confidence it's going to go down. So you entered, even though it pulled back, you stayed in. Guess what? It came and hit your first TP. That is the expansion. Don't worry, guys. We're going to do another example using a buy. Obviously, that would mean that we have at least 2 examples, whereby we will not have this disruption as we did, before. So it came and hit the first level of 61.8. On this occasion, it actually even came and hit the next level here, which is 100. Now, if you stayed in the trade, it came and hit 127 and 161.8. Now, I know what you're probably thinking. You are thinking, but it's pulling back though. It's pulling back. Not everybody would stay when it pulls back like that. They're going to panic. But because I know, looking at this area of resistance is a strong area of resistance, and perhaps because I have checked a higher time frame, I know it's a solid area of resistance. I know it's going to go far. I'll be bold enough. I'll be confident enough to stay in the trade and let it basically just weather all the pullbacks. But in case you want to take partial profit along the way, you can definitely, close, and take some profit. So here we see that we entered. We see that we entered the trade here, maybe, at this point or the close of the candle or somewhere else. It basically, went against us, in this case by about 30 pips, came down, 33 pips. It eventually came here, 10 pips profit now. It went back up. It came back down and hit our TP1 at 12 pips. Now, obviously 12 pips, you might say, oh, 12 pips, that's nothing. It depends on what time frame you are trading. It depends on where you entered. Now, even though I gave the example of entering the trade here, going with some of my strategies, this is not where I would enter unless I saw the trade late. If I saw it early, that's not where I would enter. I would enter maybe here. So let's assume, we placed 2 entries. I'll throw this in for free anyway. I'll throw it in for free. That was not what I planned to teach, but, one of the entry strategies that, you could use is, like I've taught, our long-term members, the price came down here, it went up. When the price is going up, obviously it's green. There are red candles there, it's going up, green, green, green. And this was the last green candle. If you want to sell, wait for that last green candle to be broken. So you put your marker, you put your line there. And when the price closes below it, that's when you enter. Now, okay, fine. This is not a very brilliant example because there are wicks here. But ideally, when the price closes below is where you enter. So if you had even if you had taken the risk and placed a sell stop order, you would have been taken to the trade here, which would have been like 19 or 20 pips, more than this one. So let's assume you entered 2 trades. On this one, you'll be in a drawdown of about 30 something pips. On this one, you'll be a drawdown of about 12 pips. So that's fine. But what we are looking at today is Fibonacci extension, to determine where to come out of the trade, not so much the entries. So we see here in this example, it did come to hit our TP1. It hit TP1, it proceeded to hit TP2 before pulling back. Notice, guys, it is used to determine areas of exits. That obviously also means that it could be used to determine where the price would most likely reverse or pull back, albeit a temporary pullback, but a place where it could pull back. Now, guess what happened here? The price came down here. This, level, it basically just sliced through it like a hot knife in butter. But when it got to the next level, that was where it pulled back. Came down here. It struggled as well because it's a key level. And it struggled, it was oscillating in this area because it's a key level. So Fibonacci tells you where the price is most likely going to struggle or reverse, even though it's a short-term reversal. Now it came back here. It came back to the next level. And guess what? That was where it was struggling again, oscillating before it broke down. Have you noticed, guys, that each time it gets to an area, a level, that's where you have some congestion or oscillation? Because if you think of here, that's what's happening here again. Here, there was a bit, not much, before it broke down. So having this in mind basically lets you know where the price would struggle, and I suppose that's enough for this. We're going to take a break now, just to take your questions. We're going to pause the video just to take your questions, and then we will look to we would go to another example, buying this time, going long as opposed to going short. So let me just pause this. Let me pause the recording. Okay, so basically, 2 questions have been asked. I thought I'll just quickly answer them, then we'll take more questions. Now, what basically we have, I have, decided to show you here, based on the questions asked, is, the fact that you can actually, trade using the Fibonacci extension tool without Confluence. You can trade it on its own. I mean, obviously, maybe it might require a bit more experience, but you can actually trade it on its own as long as there is a trend, because you can't really, it's not the best, it's not ideal using the Fibonacci extension tool if there is no trend, because it has 3 points, A, B, C, there has to be a pullback. When we have pullbacks or when we have a trend, there is usually a pullback. So in this case, if we consider this area, if we consider this as a trend, we can see there are pullbacks. There is a swing high, swing low, swing high, swing low. Each time is pulling back. So if you say this is point A, this is point B, that will be point C. Okay, perhaps that's not the best example. Why? Because it pulled back 100%. You don't necessarily want to do that. You don't want it to be that you are trading it, when there's 100% pullback. Instead, start from the next, the next impulse. This obviously was the impulse. You could say this was an impulse, a pullback, continuation. So start from an impulse. always, start from an impulse, have an impulse as your A. So in that case, you will go to the tool, click, hold down, drag to point B, and get your handle by double clicking on the end of the dotted line there. Take it to how far it pulled back, or where it pulled back to. So you have A, B, C. A being the beginning of the move. The beginning of the move of a powerful move in one direction is usually, we call it the impulse. So you start from an impulse. Don't do it from a correction, start from an impulse, a big move. So that is the powerful move. It moved up like so, pull back here, and you have A, B, C. So with this one now, you can see the projections. Straight away, the projection tells you which direction is going to go. You entered here. Let's take this off. You entered, so when you saw that the price was beginning to go back up, that's when you entered. So let's say you've decided, what strategy for entry. You now decided to enter when you saw that the price was beginning to go up. So the price took off from here, pull back, was going to start continuing. You jumped in here for a buy. Sorry about that, something went in my eyes. Sorry about that, guys, just 1 minute. Okay, so you decide to jump in the trade, with seeing that the price was going to continue up. Okay. So you jumped in the trade here for a buy to go long, seeing that the price was going to continue up. You are going to be targeting these points. How far you want to target, depends on you. So you jumped in here for a buy. You jumped in there for a buy. The price went up, gave you about 30-something pips. Now, if you had set your stop loss here, sorry, not your stop loss, your take profit here, it would have closed you out at 24 pips. Unless perhaps you were sitting by the computer and watching it to see, how far it will go. Because obviously, as you can see here, it went past this 61.8 level. But let's say you had just set your stop loss and your take profit and it went away. It gave you that much, and then it came back down. Obviously, your entry was here. If you didn't get out of this trade, it would have come back past your entry. You will now be in a drawdown. But guess what? Knowing where to place your stop loss, that's the swing. You will place it below the swing. So this is basically where you would want to place your stop loss. People would do it, differently. Different people would trade differently as it relates to where they place their stop loss. But really, from here to here is about 55. Okay. Expect to get that much. After all, you can see, people usually expect the price to come as high as 127. So if you entered here, from here to 127 is about 60-something pips. So having your stop loss here, could be a bit safe. Otherwise, if you want to use ADR or any other method for applying your your stop loss, you could say, let's go for ADR, for instance. That's about 7, or that's about 8 times 2. From here to there, that's 16, which means you will place your stop loss. You'd have placed your stop loss here. If you were going with 2 ADR, you would have placed your stop loss here. So when this came back down, it did not exactly hit your stop loss. There are a couple of things I could teach. Obviously, we don't want to go too deep today, so it doesn't become confusing, but just to know that these are the areas you're going to be targeting. So you enter this trade here. It gave you 20-something pips. profit, 24 pips, and your first, maybe one of your trade closed. If you had another position open, it would have meant that it came back against you. You were in a drawdown of about 48 pips, but then it went back up again, came down, went back up again. Oh, sorry, that's not the entry. This is the entry. It went up and down, came back here, giving you another 26 pips. Now, if you didn't come out because you are targeting the higher levels, it would have been doing a zigzag until eventually it hit the top there. Now, like I said, earlier on, people use this for swing trading, for scalping, and for day trading. If you are swing trading, obviously, it means you are going to be patient enough to allow the market room to move. So it means that you're going to be in the trade while it's doing all this zigzagging, while it's pulling back and swinging and all that. You're going to just remain in the trade because you are swing trading. You don't mind being in the trade for some days. But if you are day trading, you are going to be wanting to take profits at some key levels. You enter the trade here. This is definitely a key level. That's one of the levels, 61 point something. You take profit there. It comes back down. You take profit again. Well, you could decide to take profit again. You can only begin to master this or become more profitable at this once you start trading it. But obviously, for those who are, my full-time students, or if you like, my regular mentees, we are going to be looking deeper at this. We're going to be looking deeper at this, considering a whole lot more nuances as it relates to this. So one of the questions asked was, had to do with applying the Fibonacci tool close to areas of support and resistance, because that's what I said. It's best to apply them close to areas of support and resistance. Here, for instance, I didn't so much consider whether there was an area of support and resistance, because I saw a trend and I just decided, okay, fine, I'm not even going to trade it with any confluence. I'm going to trade it based on the fact that I've seen a trend and I'm going to get in. A trend obviously has, impulse move and, pullbacks. I've seen the pullback, which means I can draw my point A, B, C. Point A is where the impulse starts. It gets to the swing high, and then you take it back to how far it swung or pulled back to, which is here. So let's go back to where we were earlier on. Let's delete this one. This was the example we're looking at. The other question had to do with the fact that, okay, the first question was, we are meant to take the, apply the tool as close to the retrace and the support and resistance as possible. Now, where we started drawing it was here. Now, guess what? This is close to resistance. Now I know what you probably are thinking. You probably are thinking the price here is even closer to resistance. This one is banged on resistance. Well, yes, but like I did say, during the course of the teaching, was that because you are entering the price, you are entering the trade. You are entering the trade after it has pulled back. In this case, maybe here. Let's make this yellow broken line because that's the entry. The yellow broken line on my chart always represents the entry. The red one is the stop loss. Let's put as a stop loss at the top there. So we see here, we entered the trade here after the pullback, and we saw that there was a continuation. So the trade swung low from here, pulled back. When we saw that it was already going to continue down, that's when we entered. Okay, so we saw the pullback. You must see an impulse correction or pullback before you enter. So we saw that, when you switched on your computer, this was where the trade was. This was where the price was. And you basically just looked back and realized that it's a possible continuation because you have already seen an impulse correction. Even though you woke up in the morning during the London session, you saw that the price was here, you know that having seen that it's close to resistance and it has already formed an impulse correction and it's going to continue, you jump in the trade, you basically, would then draw it out. So in a sense, if you see a setup that is tradable, you want to then look for the impulse, where the impulse, move started. So this is where you entered. This is the impulse move that you saw. I know you could say this is an impulse, correction, continuation, but the impulse you are looking for, the beginning of the impulse you are looking for is the one closest to your entry. I don't know if that answers the question. Hopefully it does, or if there was a second question that I haven't answered. Okay, so let's take more questions. Okay, so we're still recording. You can unmute yourself and ask any question. Ask a question if you have any question. If you have any question. Okay, no questions. So basically, we would do one more example and call it a day. So we've done two examples. One close to support. Well, sorry, resistance. I said the best time to enter or to use Fibonacci extension. And by the way, retracement tool as well is to use it close to an area of support and resistance. We are looking at Fibonacci extension tool today. And these are the keynotes, even as pointed out. These are the keynotes that I pointed out that we are to use or to have in mind when getting into trade. The Fibonacci extension tool has 3 points. It's best used for confluence trading, which means there's another strategy or technique that you might want to use in conjunction, maybe a moving average or a price action. It's used for finding exit points. Best used for finding exit points. Use or apply as close to support and resistance as possible. Also use preferably, preferably in a trending market. And the final one, only enter the trade on a pullback. Only enter the trade on the pullback. So we're going to do one more example using a different pair now. We've done GU. So let's go to USD CAD. Let's go to USD CAD. USD CAD, where are you? Okay, let's go to USD CAD. Let's go to a clean. Let's have a clean chart. Okay, so let's now look. This is the 1 hour time frame this time. I mean, we did the 15-minute time frame. We're going to look for a long position now, and this is the 1 hour time frame. We did consider support and resistance. This time, let's not consider support and resistance. Let's just look for a trend. Let's just look for a trend. Okay, well, this is a trend, if you like. It's a trend, even though it's not too far from support. And you could say this is an area of, you could say that's an area of support and resistance, but we didn't enter. Let's take it that we did not enter this trade based on support and resistance. We just saw a trend and we decided we'll jump in. We just saw a trend. We're not so much considering, resistance here. We just saw a trend and we jumped in. So if, for instance, like I did say, we want to see an impulse move, a correction, and continuation. So let's see. You could say this is an impulse move, a correction, continuation. Now, some people might say it's not too clean because you have this congestion here. Okay, fine. Let's ignore this. I mean, even though it would have worked, but let's ignore it and look for another one which is cleaner. So as opposed to that, let's enter here. Let's consider we're entering, we've seen this impulse move, correction, continuation. Now, this is a deep correction, but that's fine. So we're starting from here, as in A, B, C. But that's only because we have entered the trade. We've seen impulse, correction, continuation, and we decided, okay, fine, I think this is now going to continue down. We decided to enter at the close of this candle. So you entered here. So basically, I suppose just to make things clearer, I'm not quite, that probably would help Yemisi's question earlier on. You enter the trade first before you start drawing. You are not so much drawing to enter the trade. You enter the trade first. That's why I did say, you would ideally have an entry strategy. So you enter the trade first based on any strategy, and then you look to see if there is, an impulse, correction, continuation. So I entered this trade, in this case, maybe because it broke structure, or it was about to break structure. Okay, fine, let's enter where it broke structure so that we know we have a reason for entering the trade. So we enter this trade here or whatever, it doesn't matter really. Then we now consider, okay, fine, there was an impulse move, impulse, correction, continuation. So we now go to our Fibonacci tool, Fibonacci, not retracement, but expansion, because it helps us determine how far the price would go. So we now come to the beginning of the impulse move. We click, hold down the mouse, drag to how far it went. And then we come here, double click to get the handle so we can move it around. And we take it to how far it pulled back, where it pulled back to. Double click to disable the handle. So that was the beginning of the move. That was the beginning of the move. I mean, really, you can, even if you decide to use it here, but that's fine. I mean, you can say, this was the beginning of the move or beginning of the move, but at least we know, there was an impulse, So this is the beginning of the move, the impulse move, the correction, the continuation, and then we see that it shows the various projections of how far the price might go. So we got in the trade here. Our first target was here. Our first target was here. We missed this one. If you are gotten in the trade here, if you had gotten in the trade here, then this would have been your first target. You'd have gotten like 39 pips. But since you didn't get this trade, I mean, you woke up late, or when you woke up, the trade had moved. You got in here, someone else got in there. You basically use this level as the next exit point. That's about 47 or 46 pips. But guess what? It slides right through. Because you placed two entries, your first take profit is hit here. You are taken out of the trade. Boom, you are excited, you are rejoicing. and then it goes again, boom, hits the second trade, you are excited. Oh, wow, wow, wow. What a day. Just after the first candle, the very next, well, okay, a couple of candles hit, and you've won this trade. You've gotten two trades, you've taken two partials there. If you still were in the trade, if you had more entries, then obviously you would have come to this one as well. But then note that it did pull back. It did pull back before coming back down. So what will matter here is how experienced you are as a trader. Okay, fine. I entered my trade here on the 1 hour time frame. But if I had looked at the daily time frame or even the weekly time frame, and I saw that there was going to be a deep pull, a deep drop, the market had a long way to go to the downside. I could have stayed in there if I had some reasonably sized account, which means I would have gotten all this. It just means that it would have taken some time. I mean, these are 1 hour candles. It would have taken a whole number of days, but at least I would have gotten my trade. But like I did say, because of my schedule, I personally day trade. I've been day trading for the last couple of weeks, but because of my schedule has changed a bit, I'm going to be taking some longer term trades now, some swing trades, and I'm going to be in some trades for long. So that's basically what I'm going to be doing. I don't know about you, but I would say to start practicing this on the 15-minute time frame or the 1 hour time frame. Okay, 15 minutes, 30 minutes, or 1 hour. Not so much the smaller time frames, because we know, regardless of the strategy, your trades might become less consistently profitable the lower the time frame you use. Just to be aware of that. So I would say, try practicing it on the 15-minute time frame, the 30-minute time frame. If you have a reasonably sized account, you can practice it on the 1 hour time frame, because you have to always consider your stop loss. The bigger the time frame, the bigger your stop loss will most likely be. But just to also add this anyway, note that wherever you enter, the way it is, your stop loss should be in a reasonable price point. I mean, if I entered here, it's not you could decide to place your stop loss here, below the swing here. But knowing that it is close to resistance, it might not go that far. You can place it, even, let's take this away. If you entered here, you can decide to place it, just here. I mean, you can always find areas of support and resistance to use in determining where to place your stop loss. That's not so much what we're teaching today. We're not so much focusing on where to place your stop loss or entries. We are focusing on how to exit or where to exit. Okay, guys. I mean, I suppose we've covered enough for tonight. It is the case that I'll be looking into this more, with those who are, the full-time, members of Generational Wealth Traders. I have enjoyed teaching this. I know you would not grasp everything. It's recorded. I'm going to be, sharing the recording with you. For those who are here, I'm going to be sharing the recording with those who are here. So, please send me a message on Telegram, and obviously I would send it to you. I'll place the recording in the VIP room anyway. But for those who are not in the Forex VIP room, send me a message on Telegram just to say, kindly send the recording, and I would send it to you. So thank you guys, and have a nice trading week. God bless.